Hi, Dan. It's Trevor.
Hi, Trevor. Can you hear me?
I can hear you. Can you hear me?
I can indeed. 1 second. I'll just make you the presenter, and then you can share your screen. Okay. Okay, you have the power. You should be able to share your screen now.
Okay. Can you see my screen now?
What are we looking at? Euro. Yes, I can.
Okay. All right. I'm ready to go when you are.
Right. Well, we were 8:59, so I suppose we can start.
Let's give it a few seconds.
Let's start at 9 o'clock. Well, it's just gone 9 o'clock for me.
Oh, right.
Cracking. Well, let's get started.
Well,
Well, hello
my
everyone.
sip of coffee.
No. Well, you can have a sip. I'll have a bit of a talk.
Okay.
Okay.
I'll
So,
sip
hello
you.
everyone. Welcome to another technical analysis webinar with Trevor Neil. Thank you for joining us. We hope that most of you got the message that this week's webinar wasn't cancelled in the end and we're going ahead as normal. Sorry about that. That was my mistake. So as always, we'll aim to get through everything in approximately 30 minutes. However, we may have a bit of spillover. If you have any questions for Trevor, I'm sure you all know how to do this by now, but there should be a little questions tab you can see in the GoToWebinar tool on your desktop or on your phone, and you can ask your questions there and I'll pass those on to Trevor. So the handout can be downloaded from the handouts tab, which is very similar to the questions tab. If you're having any problems locating or downloading it, please let me know in the questions tab and I'll send you a link. We strongly recommend you use the handout if you're new to trading, as it will help you understand the different indicators that Trevor uses and what he's talking about, the different lexicon he uses. And you'll notice there's also another one, another handout there, which is a CFD guide. It describes the different products that we offer and the technical specifications. I'm sure you all know him, but for those of you who don't know Trevor, I'll just give you a brief intro. He has over 40 years experience as a technical analyst and trader. He worked for large companies such as Merrill Lynch and Bloomberg, where he was global head of technical analysis. So suppose we can get started. Trevor, over to you. What do we have this week?
Yeah. Well, I think we've got a little bit of a change in tone with the dollar, stronger dollar, but the lock between the dollar and the stock market seems to be ending, so that's an interesting subject on its own. But well, let's get down to it. Let's get going. Okay, let's start with the euro. I've got a weekly chart on the euro, just a big picture chart, and here, so each bar is a week here, and really want to show you the important context here. We had measured previously, with those of you that are regulars with me, with us here, we've been measuring from this March low up to the high here, back down again and projecting forward. One of the Fibonacci resistance levels was 50%, which was at 123, which we hit, and then we drifted since then. Now retraced rather classically back to the break point from the horizontal consolidation here at 119.50, and then interestingly last week got a kind of electric shock at that point and bounced from it, leaving us a shadow below. So now let's break that down into the daily. So this is the shadow that we saw on the weekly chart here and bouncing here. So the nature of this is a downtrend channel, and we drifted near the low of it. The RSI is still negative in my reading, still going down and not yet broken up. It has broken the lower 35% line, but hasn't broken the downtrend line here, but it is starting to look as though this is where it's going to hold. So this is that consolidation that we saw on the weekly chart. I've extended the line here. The reason it's dashed, just to let you know, is for those that are new, that's my shortcut for a line which isn't drawn very precisely. It joins up highs, but they don't line each other precisely, therefore reminding me when I look at it here, don't obsess too much about exactly where the level is, because it's somewhere around here. So it could be above it or below it here. This is an unreliable line as opposed to a nice line with 3 points on it. So I think that we might be holding here and starting to bounce, and the trigger will come when we break through this downtrend line here, which is at 120.70, let's say, and then through, the most important would be to break through this consolidation area here, this minor consolidation area here, which the top of that is at 121.90, here. Those two would trigger another resumption of the longer term strong uptrend for it. But the euro is weaker, and it's suffering a bit. So unlike the British pound, I don't want to sound jingoistic about this at all, but it is a good performer, the pound against the dollar. So let's go again, start at the weekly chart here. And it's definitely strong. This is a different chart completely. We've got a series of highs here. These are quite clear where they are. We've got this significant resistance level which broke emphatically at the end of last year, and we're on our way up from there now. The indicators on the weekly basis are all strong. The averages are all strong. Everything looks good from this point of view, pushing from this strong base point. What do we encounter ahead, which we have to look at when we're looking at this type of long-term chart? So we've got there's those 4 significant points that we've cleared now. We're looking at tackling this double top formation, which was formed back in 2018. I put one of my cigars around it, and it's centered on 140. It goes up right up to 144, but it's centered on 140. So I think that this move here is punching towards that 140 resistance, and really has a pretty clear run between here and there. I know we're a lot of the way through it, but we've still got a bit to go before we get stiff resistance. So going now to back to the daily chart, here we are pushing forward. Bit of loss of momentum in here. We talked about that last week. So we've got the declining tops on the RSI, but this is minor. And as I said last week, I really think it is only a pause in the upward journey. And we've broken up through the downtrend line in the RSI now, and so I think this trend is resuming, and so I'm hoping that this time next week when I'm talking we'll be above these highs here and continuing the journey up and continuing the pattern, the very nice technical pattern of higher lows in the market. So things looking good for a bit further. Another, let's say, could be 3 cents on the upside before the significant resistance of the double top kicks in. Not say it won't be broken, but I'm just saying that we have to look again technically there. Let's look at this relationship between the pound and the euro
Trevor,
itself. So, yes.
Trevor, can you hear me?
Yeah.
Just before you go into a new currency, we just wanted to. Yes. We've got a question here from Gregory Amos. Thanks for your question, Gregory. He says, a process question. Your charts, weekly and daily, are different charts for the same pair, correct? Rather than the same charts on different time frames.
They're the same charts. They are the same pair. That is GBP USD and GBP USD, and each bar here is a week.
No, it's GBP Euro. That's GBP Euro, is it?
Oh gosh.
Yeah, that's USD. Yeah, there we are.
Okay. All right. I'm sorry, I hit the button below. Sorry, but I think I did show you the right one.
Yeah.
with these 4 big tops in there. So it is it's a weekly chart. So each bar is a week of the euro. And if I hit the wrong button and showed weekly Euro GBP, which I don't think I did.
No.
Yeah, I think that we definitely talked about this and showed it in the longer term. So if I haven't answered the question properly, please ask it again, because I'm keen to not discourage
to get to the bottom of it.
But this is the one I did show, and this is GBP weekly.
Yeah.
And there it is there. And so I just want to collect. What I was doing quite quickly, which might have thrown you, is I wanted to change the period back to 2 years, because whatever period I have on is what I'm going to show in the future. So I don't want to show too much data as I go forward. Okay, but thanks, Gregor. I do appreciate the question. So going to GBP Euro, so GBP Euro weekly here. So we had this ascending triangle. We've talked about that for ages. We broke out, very significant technical breakout of that triangle. I'm talking about big moves here. We've got this resistance here. We get a cigar centered on 114 here, but it isn't a very you know, it is quite big resistance. I mean, we did spend 6 weeks forming this, so it's not no resistance, but I don't think it's going to stop this move. So I think we're going to punch through it. I wouldn't be surprised if it slowed as it goes through it. But look at the price here. If we can get to the other side of it, which is at 115.30, there's nothing between 115.30 and this double top in here. So we could have quite a fast move from that break point. So going to the daily chart now, and so each bar here is the day. Here's last week's powerful move up. We are still moving higher. I know we've had a little bit of a pullback on Friday and today, but you know, really in the context of things, it is not a big pullback. The RSI is still making a pattern of rising lows and still strengthening at its high reading. The MACD is positive. And if you count this as a Marubozu, and those of you that are very strict fundamentalist types of candlestick people might say, well, you can't have a shadow below, but really these days, does anybody ever not have a shadow below or above? I would say this is small enough to say it doesn't really exist. And in fact, it was bullish because we opened, went down, and then pushed on up. But the key thing is we finished nearly at the top here on Thursday, and we're holding the 50% level. That's just for those of you who are nerdy people about Marubozus. That's the crucial point to hold. If it holds within for the next 2 bars, the implication from this is that it is what it looks like, a very strong day, not a climactic top. Because you know, sometimes we get moves like this at bottoms in the market and tops in the market, but the key is how you behave in the next few bars following the Marubozu itself. So holding the 50% level, holding the midpoint of the battle line, as Honmar said, is crucial. So far, we're doing that, and so I think from a short-term basis, it looks as though it's only a minor correction, and that we should. Once you know, hitting the upper side of the Bollinger Bands is, you know, can correct. Also the RSI is high, but it's still making the higher lows pattern, so it isn't yet saying we're going down. So no surprise if it goes down a bit, but I think that you should treat as an opportunity. Let's go now to the Swiss franc. So this is dollar Swiss, of course. So here, this is the dollar rising here. I know I keep repeating myself for those of you that are here from week after week, but forgive me for that. Very important level here at 90. We've this was a reverse head and shoulders. We recognize that. This was the break of the neckline. We powered up. We went to the minimum price objective, and now we're pausing at resistance. That old support level, that's it here now on the daily chart, is now a resistance levels. We've punched into it, reversing back out of it, back down again. Very typical behavior because the resistance is extremely strong in this area here, and possibly we've done enough on the upside for the dollar here, and it will resume its move to the downside. I'm not saying that one day down means that it's all over at all, but you know, definitely we've got significant resistance here. Definitely we punched into it. Definitely on Friday we had a weak session, which might mean that's the end of it. Might not, because we haven't reached the minimum price objective of the reverse head and shoulder, shoulder, head, shoulder neckline here. That is still a little bit higher, up to 91. So it will be a struggle because the resistance is so big here, but we'll watch that. We like to go for easy things, don't we, really? So let's look for easier things. New Zealand dollar against the US dollar. So here it is. What's catching my eye is the symmetrical triangle. I'll call it that. 1, 2, 3, 4 at least points on it, and 3 or 4 on the bottom too. So well-formed triangle. The RSI making the same pattern itself. So that's indicating this pause is in process. Generally, you know, on balance, this is most likely to break to the upside, but because the angles of these two lines are the same, this means the pressure by the bulls and the bears is the same. So it's not really for certain that we're going to break to the upside, not at all for certain, but just generally it is more often a continuation pattern than a a reversal pattern. I just want to go back and show you a bigger picture here. Let's give you 10 years. So this is what we're punching into. My cigar has moved. Let's put it back here. So this area here is a big resistance. We're at that resistance. We're pausing at the resistance. So you can say it's not really unexpected that we're pausing here. I mean, we did talk about it and say expected to do that, but I think it's got much further to go. Shoulder, head, shoulder, that's what I'm seeing, and minimum price objective much higher than here. Of course, it's never a straight journey. But the clearer picture, I think, comes from the New Zealand dollar versus the Japanese yen. So that's how I'm going to look at the Japanese yen is against the New Zealand dollar. I want to look at the weekly. And I want to give you a big picture here, really big picture here. Let's move this out of the way. So we broke this downtrend line, which was very significant for me. I counted this pause here as a pause on the journey. I measured from here to here, pull back to here, and we're at 61.8% of that journey. 100% is 78, and I really think that we're headed there as a result of this particular chart patterns. All sorts of very significantly bullish chart patterns here. I'm sorry, I shouldn't really have so much data in there. We got the downtrend line, which does extend off to the left here. Low, lower, low, lower, low, lower, low, higher, low. So shoulder, head, shoulder, reverse head and shoulder. Here at the neckline, we have this consolidation. Then this measurement, Fibonacci measurement that I've got here is from this March low to the high to the pullback low, projected up. We're at 61.8% now. 100% is at 80 there. We have got, of course, resistance levels on the way, but none of them are really significant. We didn't spend much time at this top and only 1 week at this top here. So all those things are not really, they're not big consolidations like this one that really would likely halt until we get up to this top up here, this double top up here. And that was the double top that started this leg down. So more to go on this one. I think it's really, I think it's getting ready to move significantly higher. I really do think it is. So look for this to follow through, follow the pattern of higher lows, and we've made the new high here, and I just think that this is trending strongly up and has got more to go, and really it's got much more to go with very little resistance on the journey. So, you know, I'm all a big fan of going where it's easy, and not saying anything's ever easy, but things like gold and things like the yen are kind of hard. So the next one I'd like to do, and the last one I think before we go to cryptos, is the Australian dollar. And I'm here, I think also we've got something important going on. Let's go to the weekly chart, big picture firstly. So I've been very bullish of it. I think we're in part of the journey. We've got big resistance here at this double top here, which is at the 61.8% of the Fibonacci projection from the March low up here, then pulling back to here, then projecting up. Now, I think it's very interesting that we've gone to this 50% level, which we had, you know, as soon as we recognized this low, we were projecting up here. 78 was the level that we saw. It's touched 78, pull back now to 76, the 38.2% level. So let's go to the daily chart now. So this is the
Trevor,
38 point.
Trevor, can you hear me?
Yes, I can.
Sorry, just got a quick one. We've got a question from Lamar Newsom. Thanks for your question, sir. He asks, what MA, I think, what the blue moving average? He says, what are you using on that pair?
Okay, I'll refer you to the helpful fact sheet, which you can download, which explains all the indicators and my parameters. But this is 20, 50, and 200. Simple moving averages. 50 and 200, I only use them because other people put a lot of store by them. Personally, I think they're much too slow, insensitive for my time frame, but the crossover of them golden crosses and things like that. People talk about that a lot. But what I do see is the 50 is well above the 200 and the gap is widening. That's a strong market. This is the 20, which is part of course of the Bollinger Bands. But really, to save time, to go through all of these, I use different parameters than the normal parameters in the RSI. Why I do that is explained in that document. So I recommend you look at that document, Lamar. Okay, so here we're moving up. I showed that in the weekly chart. We've pulled back. I think the pullback is complete, and I'm looking for the trend to resume. And I think it's starting now. Friday's move was very significant for me. I like to trade in the direction of the long-term trend and use pullbacks. The RSI came nicely down here inside a bull market, and it started to go up now. And I think also it is breaking its downtrend here, and so it channeled down with the RSI, with the price action here. And so I think that we're swinging back up. And so, what mustn't happen is we mustn't break this low here. So as long as we hold above that low, I think the correction, this is a correction. The tide is up, the wave was up, then it was down, and this I think is the completion of the wave against the tide, the reaction against the trend, and that the wave is starting to resume in the direction of the trend. But we'll see that again soon. I'm looking forward to that because this has been a great market for many people, both down and then up with a very clear and sustained trend. So this is quite normal behavior here. The serious resistance comes in, I think, up here. Okay, moving to Bitcoin now. Whoops, Bitcoin futures, sorry. There we go. Now here's this is a weekly chart of Bitcoin. You see my labeling. This labeling has been on this chart since we recognize the 2019 low was the low, and we measured from the start, A, B, pull back to C, took the length of AB, added it to C. That's what we've got here, and it gave 100% at 22,100. So that was our minimum price objective for the move. Now we're consolidating at 161.8, which is 33,800, and I think it is consolidating there in a positive way. So we've got no doubt whatsoever that we're in a strong uptrend here. The weekly MACD is positive. The RSI is making a positive pattern of higher highs. I like all that. Now going to the daily chart, we have talked about this triangle. We've argued whether it was symmetrical or not. I've had quite a few messages about that, people saying it was a descending triangle, which was potentially bearish. I didn't think so. I think we've got higher lows in here and lower highs in here. I've been drawn a dashed line of here, of course, because of that spike there. We got 1, 2, 3, 4, maybe 5 points, but the 6th point here spoils the other 5. And so I can't draw it as a solid line because it would be bad form. So I've drawn it as a dashed line, but the behavior following the break was definitely indicating the line was correct because it went away like a rocket as it went through the line. So it was really shouting to you, hey, Trevor, your line was right. That was what it was telling you. So off we went here. We measure the height of the triangle itself, 1, 2, 3, 4, 5, 6.5 here. So this would be 1, 2, 3, 4, 5, 6. That would take us up to here, 46,000 on the basis of the triangle itself from a classical charting point of view. Some of you might be more aggressive and use the flagpole as the length, and there's no reason not to in this kind of market like this. But to me, it is bullish. We've got the previous high to contend with, the early January high, but that's not a, that was very briefly formed with this doji star here, long-legged doji, more or less doji here, with tiny body here, and so this is not a very significant resistance level. So I don't think the market's going to have trouble taking that out. So I think that just Friday was a correction week, after a very strong week, and that's all it was. And we're resuming the journey higher now. So I'm looking for this to continue to work higher, and I'm giving these big numbers because I think this is a big bull market. That's what it is. Okay, going to S&P now, to the US 500. I mean, so here it is, weekly chart. Firstly, oh, joy of joys. I mean, really, we should all be, so rich after seeing this, shouldn't we? It just goes up and up and up. The trouble is, it's not as easy as it looks. The MACD, I've got this labeled as positive, but it's only just positive, and it nearly crossed here. We've had another bearish divergence in the RSI, but then breaking to a new high again. So frustrating for technical analysts when we see this. And when we think we should ignore it, we get things like this where it was so correct and, gave us the warning that could have, saved us being, if anybody caught long on that fall there. But here we've had one. Now we're breaking to a new high. Maybe it's going to be a triple divergence. It is frustrating. There's no doubt about that. But without the divergence message, the market is very bullish with the rising lows pattern here. I have measured from the March low, going up from here, and sorry, I've taken this one as a more modest measurement. So not the March low, the October low here, the recent significant low, measured to the high, pull back to here, and that gives us now 50% is the previous high, which we look as though we're clearing today, moving to through 61.8, which should do, taking us to 4,050 on this next leg. So despite the bearish divergence, which we'll always say if the market sells off hard, well, we saw the bearish divergence, but every other indicator here, I think, is very strong for the market. It does move relentlessly higher. Moving now to the UK 100. I always start with my glance at the weekly, and here I think that what I've drawn here is this flag. Here is the flag pole, and we do our measurement from here to here, and then take that back from here to here, and it's on the daily. No, let's put it on the weekly chart. Let's do the drawing of it. So Fibonacci projection. So here from the start of the March low up to the high, then the pullback low, and here we are. So the minimum price objective from this flag pattern here is 7,166, right into where this cigar appears. So when you see a cigar, this means resistance, and this is a consolidation resistance, not a little spike like this one or like this one, which are very brief in formation, not much trading here. Many people bought and sold in a relatively narrow range here. Lots of psychological importance to that level, very significant resistance, and that's there. So I do see this as, let's go back to the daily chart now, as a pullback inside an established uptrend. Therefore, being the type of trader I am, I see that as an opportunity to get a position in the direction of the trend. I see an uninterrupted pattern of rising lows. I see that the market went down deep, oversold on the daily chart in a weekly uptrend, and so this was in fact the trigger for me. Since then, it hasn't really pushed ahead. For me, the protection is still 1, 2, 3, 4. This is the 5th day back. I use the 5-bar low as my trading stop, and so that's still here. I will be very relieved if I see this downtrend line here. You see it's a dash one because it's only got 2 points on it, here taken out, and then I think I will be fairly content that we're in the next swing to the upside. So I think we are, but I think it's early stages. Let's look finally at Germany. No, not finally, sorry, second to finally. Germany. Here again, let's have a look at the weekly. We're making a new high, recent high here, testing this high, and pushing. Sorry, that's the stocks. We are making a new high.
It's not the
Yeah,
right chart.
so, yeah, wrong chart. So we are making a new high. So yes, here we are, making the new high here on the weekly, and so it's looking onwards and upwards for this one. MACD positive, RSI, of course, it's going to be in the top half of its area. I do recommend the work of Andrew Cardwell when you're interpreting the RSI. This is where I learned everything I know about the RSI from his work. Have a look at that if you're not familiar with it. Brilliant guy, absolutely brilliant guy. So what have we got here now? We pulled back against the uptrend, and we met significant support, this support here, and held and bounced from it. We had this oversold condition in a long-term rising market. So for me, this was an opportunity, and we powered away from that perfectly. The stop loss now is rising for me. I'm able to rise it, and we're breaking to a new high, I hope, here. And this is the beginning of this next leg upwards here. So I think this is looking, as from a trading perspective, almost the best index. I suppose the S&P, because it goes on and on and on. This one, because it's breaking to a new high, a significant new high, not just like it breaks it every day, it doesn't. And this is a significant new high. But, the one I like most is one that, you may not be on your normal radar, which is the Japan 225. And, today we've burst ahead here, ending this pause that we had, it is very bullish. We had this pullback, which, if you weren't long, was a good opportunity to get back in the direction of the trend. But I just want to show you again the absolute beauty of this. I need to bring back back to, in fact, further back than that. I want to show you, because we have to look what happened the last time we were here. So I'm going to go back to 1990, and that isn't often that you have to go back to that far to see the last time we were here. So here it is. Actually, I'll bring back a little bit more if you don't mind. Bear with me a second. Let's go back to 1985. Okay, that's before you were born, probably.
I was 1, Trevor.
You were 1.
1 years old.
1985, I was the managing director of a brokerage company.
Oh my God.
But I am very old. Okay, I've talked about this, but I just want to enjoy it one more time, really. So we had these series of tops. This was the trigger here that unleashed the awesome move that we're participating in now. We burst forward. We've gone through, I think, the 100% level from the move A, B, C, D here, and we're heading to 161.8, which is 33,000, which takes us back here. So we have to go back to 1990 to find the last time we were here. But look here, we're almost back at the all-time highs. I think that we're going to go through that. This is a very, very bullish market, and to get opportunities like this is going to be rare in markets like this. They're going to be, when you get them, they're going to be more like flat behavior. This was a correction. This was the market getting used to its behavior, and then but here we had a decent pullback in it. Now, if you want to stop me, you can. If you don't, I've got 2 more things to say.
Please do, go ahead.
Okay. All right. One is Amazon. I just very briefly here, I'm just following up on what I was talking about before, but we are continuing the, see, that's why I have to get the scales back again. Okay, so here we are we're in this symmetrical triangle, which should result as a bullish breakout. It's still negative on the MACD. The RSI, I think, has completed on the downside and is starting to go up, so indicating that this move should be to the upside, but it's not the kind of emphatic break that we would hope for out of a pattern like this. And also it's very late in the pattern. Typically these patterns make their breaks between half and 3/4 of the way through, and we're well into this now. And when you get towards the pointy bit of a symmetrical triangle, it becomes ever more likely that you're going to move sideways. So I'm still hopeful that this is just pausing, ready for another significant leg higher, but I'm a bit worried because this is not behaving the way it should do. The one I did want to talk about was many of us traders like the sort of contrarian view, and done well actually in the bounce with the banks and the cruise companies and the motor companies and the airlines. But I just want to show you this one. Ford here maybe presenting us with another opportunity here. So here is the weekly chart on Ford, and you can see we've got a pullback here, but let's get it into context and why this is important. We're in this strong uptrend from those lows, pushing ahead powerfully. It stopped at 9. It shot through 10, which could have been a resistance, shot through these tops here. That's very constructive. Then it's pulled back to the resistance of those tops there. I'm going to draw that in as a horizontal line there. And we have retested it. So I see this pullback here as one of those, that's a retest of the previous resistance here. Came to it exactly. This was the 100% move of the move from A, B, flag here, C, projecting up here, so taking the length of A, B, adding it to C, we got that level, so that was the call. But now I think we're about to clear that and move ahead from that, because we got to the 100%, pulled back to 61.8, almost on the nose here, which was that old resistance point. So in here was the pullback, getting the RSI back to 50, which is what we need, or what I need in a strong bull market, and then it's moved up from here. So I think we've had our chance on that. It's on its way up. I noted Friday was not a great day for it, but that's to be expected as we challenge the previous high. And I'm aiming for the 161.8, because usually if we break the 100, if we do break it, not saying we have because it's a black candle, but if we do break it, then we go quite swiftly to 161.8, and that's $13.40. Let's call it that. So watch this carefully. I think this trade is underway, and who wants to buy old cars, old-fashioned cars, but I think well, seemingly people do. They're very bombed out. That's the thing. All right, sorry folks for overrunning, and thank you for being indulgent.
Trevor, we do have a request. Gold, please. Did you look at gold today?
Yes, I don't know what happened there. Gold. Well,
I think you skipped gold and maybe silver. Did you want to look at silver today?
Yes, I do. I more want to look at silver than gold. The reason is that gold is in this big range here, and it has been ranging. It had this small range, which we talked about. It's broken down from the smaller range and looks ready to retest the lower levels. It is, it's not looking great, gold. It's not looking great at all. And just to emphasize that, let's look at this thing, which is always interesting to look at, which is gold versus the S&P. So should you be looking at stocks, or should be US stocks, or should you be looking at gold? Sometimes it's one, sometimes it's the other. And here was gold underperforming the stock market. Here it was overperforming the stock market. Here, 2018, there's a weekly chart of it. It was better to be in gold than to be in the stock market. But since the end of last year, when we started talking about this, and we were testing this line, and we bounced, and then we've broken it, retested it from below, and now we've got a clear message from this, which is, gold, yes, it's for trading, it's good, Sorry, that's news. We don't want news. It's for trading, but it's as a longer term, intermediate and longer term investment opportunity. It's not the right vehicle to be in. Now, silver here. This silver, we must mention our friends, the Reddit friends, and the
the Reddit
Wall Street
army.
Bets, and yeah, the Reddit army. Yes, I'm trying to think of nice names, which causes breakup here, which I must tell you stopped me long of the market. So that move, in fact, I got long on that move there, but then, of course, then I suffered that almost immediately after I bought. So I'm not pleased with them, but it did turn out to be too ambitious a proposition for the Reddit crowd, and I may be talking to people who are in that crowd, but if I may be, a little bit condescending, you have to pick your enemies here. This is no GameStop. This is a big market that with a big supply and demand and stock situation and a massive turnover here. It's not like a tiny thing where you're taking on two very specialist hedge funds, and you can win, as you can see, against that group, but not against the rest of the world with these bigger. So pick your battles, I would suggest here, not so ambitious with them. But anyway, silver is, I think, bullish actually, even though. So it broke resistance at 27.90 and got to its target from, let me show you what that target was. There at the previous high there. Got an electric shock at the previous high, and then has come back again now. So that was there, and now it's come back again. This was okay. How that was generated? It's off the double top. It's corrected since then. I think this is really one for the album in charting terms, because if you look at it here, we had that double bottom here measured to here. If you project from the pullback between the two lows here, that's exactly the high we got to, which was the previous high. So this was really, this will go into my book, my album of beautiful chart patterns, things working out well, and it did work out well. However, I do think this is all in the context of a rising pattern of rising lows, and we will take out this high, which is not stiff resistance, and we're just correcting and really girding our loins for a charge at it. And here, look at the weekly MACD. It's looking for an excuse to cross over there. So I think it's I think it will be a good one. And maybe it's starting now. We've just pulled back. This was, for me, very significant. It went to 50, exactly 50. So that's a good enough pullback in a strong uptrend to trigger my buy. I use a particular trigger, which is going to be triggered today, actually, just to let you know. But there we are. But I had been stopped out of the previous one. In here, out there. Horrible. Don't do that to me again, please.
Well, thank you very much, Trevor. Is that I think that's all for this week. We don't have any questions outstanding. Just to let you know, I know that the questions tab is quite a small area to write a question. If you have a more detailed question, please feel free to send it to webinar@myfxchoice.com. And if we can answer that question ourselves, we will. If we can't, we'll pass it on to Trevor if it's a more detailed question.
Yeah. And if it's a detailed question, a good, a question that, deserves wider answering, I'll bring it into the next session. I'll talk about it in the next session. Because sometimes, not sometimes, always, the questions are really helpful and interesting. And sometimes they're pointing out things which I've not seen or assumed you knew or something like that. And so let's make it useful, interactive. I like people asking questions, and I hope I answer them well. I do try to answer them completely. And so, if I didn't answer the right question, just say that wasn't what I meant, and Daniel pass it back to me.
Okay, well, thanks very much, Trevor. We'll be back same time, same place next week, 9 a.m. bright and early. Well, for us in England anyway. Thanks very much. Do you have anything else to add, Trevor?
No, I haven't. I think the markets are great at the moment, and some weeks I look forward to. I look forward to this week. Some weeks I don't look forward to. And thanks very much, Daniel, for looking after us. Thanks everybody for yes, giving me some of your valuable time. I hope you find it useful and beneficial. And above all, may the trend be with you.
Bye bye, everybody.
Bye bye.